First of all, I want to start with your take on where the housing market is right now. We've seen some slowing even this week with some new housing sales as well as existing housing sales.
Sure. First, thank you so much for having me on the show. Why don't I just give you a little anecdotal evidence of what we're seeing in the field right now? Our home sales are down about 15 to 20%, but that's a headline number. And I think it'll be helpful to kind of dig a little bit deeper into that number. The reason, for the most part, it's down is because we can't deliver homes. We're still having tremendous supply chain issues. Also, we find that a lot of home builders are actually holding back on the number of homes they want to deliver. And that is for a couple of reasons. One, inflation, because costs keep going up and they don't know what it's going to actually cost to finish the house. And two, they want to ride up the home price appreciation. So I would say for the most part right now, while we see a 15 to 20% slowdown in sales year over year, a lot of that is because of other extraneous issues. It's more of a delivery issue than it's a demand issue. With that said, we're definitely starting to see a pullback. We're starting to have to go deeper into our wait lists, but every house at this point that we deliver in the markets we're in, we are selling. But I think we have to be careful about what we see, on a going forward basis, because definitely we're starting to see things slowing down.
That's a really helpful way of putting it up, because we're having those discussions about the overall economy. Is it supply? Is it demand? As I understand it, you've got a supply problem because of supply chains. People say that's going to go away. Is it going away in housing?
Well, it's not. I mean, we definitely have issues. We have problems getting trusses and windows and appliances. We're delivering homes with plywood windows at times. We're having all sorts of issues. And of course, the war in Ukraine and what's going on in China and the work stoppages there, the deliveries and transportation is an issue, and jobs are an issue, and trades are an issue. So it's gotten marginally better, but we still have tremendous supply chain issues. And look, if you look at how many houses we're delivering a year in total, this is all forms, it's about 1.2 million housing units a year, which is sort of in equilibrium.
So Tom, some of the issue can be on the demand side. At some point, we've heard about mortgage rates going up to 5.5%, something like that. So that must affect it to some extent. Are you seeing some effects with that? Because we also have the Fed is going to start selling off some of those mortgage-backed securities.
Yeah, for sure. I mean, look, the consumer's stretched. So why are they stretched? They're stretched because of inflation. So we have all sorts of issues. We have gas prices are more expensive, and we have the cost of food is more expensive. And of course, as you point out, mortgage rates are an issue. So the consumer is stretched, and that is certainly going to be an issue on a going forward basis on housing. But we are seeing, people taking less options. They're going to slightly smaller unit types, and they're renting. So we aren't necessarily seeing a slowdown at this point because of mortgage rates. But again, I think we have to be careful. I think, the crystal ball says it's going to get a lot worse. We're not seeing it today, but I think in the future, we are going to see a slowdown. And as I mentioned, the 15 to 20% or so we're seeing year over year decline at this point isn't a demand issue. But I think we shouldn't kid ourselves that we are seeing it. Again, our traffic's down in a lot of our communities. It is starting to slow down. So I think we're going to start to see the slowdown come in the next couple of quarters.
When you say things are going to get worse, a lot of us go back to 2008, the last time we really thought hard about a housing crisis in this country. And there are some anecdotal incidents where it sort of feels like 2006, 2007, where people are outbidding each other for houses. They're going way above the asking price. Are there parallels with what happened in 2008?
It's a really, really good question. So why don't we go back in history? Because I think, we really have to analyze where did we end up in 08 and why did we end up there? So if you look back to 2005, we produced 2 million housing units. So in general, we produce 1.2 million households a year. What's a household? Your kid graduates college and moves into an apartment. A couple moves out of their parents' house and they take an apartment. There's a divorce, et cetera. And that creates a need for housing units. So against a total need of 1.2 million units, we produced 2. And then it did slow down, because remember, after 05, even before the GFC, we started to have a housing slowdown. We still produced 1.5 million housing units. So we had a massive oversupply going into then a demand shock. So it was really the perfect storm. And that is why we ended up with the global financial crisis. So in those days, we just had a massive oversupply, and then we had demand just fall through the roof. Excuse me, fall through the floor. So that is why we ended up in the GFC, and that's why we ended up with a massive oversupply of housing. At that point, people thought there'd be 8 or 9 million foreclosures. We actually didn't believe that number, because fundamentally, we don't believe that if your house goes below your mortgage value by 5 or 10%, that people are going to walk away from the house. So we actually, at that point, started to buy housing lots. Why do we buy housing lots? They have tremendous convexity. If a home price goes down 10%, housing lots go down 20%. There's some point where if you're going to build a house that costs $200,000 that's worth $180,000, the lots are theoretically worthless, although of course they have some option value. Household formations also dropped through the floor, and that's because people doubled and tripled up. People moved into their parents' basements. There was such tremendous unemployment. So we started to see that at some point when the housing recovery happened and the economy started to recover, people would start to move out of those units and create households again. So that's why we did it, and we thought it was the best way to play the recovery. So fast forward to today. Today, we have, the last time mortgage rates were at this level, we had 1 million more housing units. We have, in a lot of markets, 1 to 2 months of supply. So right now, supply is not an issue. We have very, very little supply in this market. But of course, we're looking at the demand side now, and as you point out, mortgage rates are up. As I said, the consumer is stretched. So there's no question that there's going to be a demand shock. But there isn't the supply issue that we had in '08, which is why we feel pretty confident that we're not going to see a GFC type situation in housing as we did before. Now, look, we have a lot to worry about. We're clearly heading towards a recession, potential recession with stagflation. So, there is a lot in the economy. We're starting to see consumers pull back. We're starting to see corporate earnings come off. We're starting to hear about potential layoffs. We're starting to hear about jobs being decreased, and as well as wages going down, which is all problematic.
Yeah, so Tom, here on Wall Street, we'd like to get some free investment advice if we could. So given all that you just said, where are the investment opportunities? I know recently you said, I believe, you want to sell old and build new. Is that still true?
Yeah, for sure. I mean, we think, I'd say a couple of things that we're looking at right now. We are very concerned about older housing stock, particularly in multifamily garden-style apartments. We think that people don't necessarily want to live in those type of units today. People clearly in a post-pandemic world are going to have some level of work from home. And given that they're going to work from home, they need a different type of unit. So we are doing a lot of what we call build to rent. And they're actually single family homes in a whole community where they are all for rent. So they could be 200-300 units of single family homes. They could be 1 bedrooms. Generally, the 1 bedrooms are conjoined, but they have a little backyard, 2s and 3 bedrooms with a really nice amenity package, including a shared workspace where if the couple is in the house and one needs to be on Zoom and the other one needs to be doing work, they can actually go into a shared work environment. So we are definitely looking into that, and we like that a lot. And that also, I'll throw up their rents. So look, as things get more expensive for buying, we think, and rents have gone up as well, but we do see really strong demand on the rental side. Again, we still see very good household formations, and people will make a lifestyle decision first and a financial decision second. So they'll decide, I want to be in a house, I want to be in an apartment, I want to be in a mobile home. So they make that decision first, and then they say, am I going to buy or am I going to rent that? So we're seeing more and more demand on the rental side. So a lot of what we've been shifting to, we still do a lot of home building, and we still really like that sector a lot, but we're also looking at build to rent communities as well, because we think that more and more, especially as mortgage rates go up, we're going to see more people renting. And we are in a sort of Uber Airbnb generation where people like to rent things, they don't necessarily own things as well. So we're not seeing the same desires of home ownership as we did in the past.